Let's take it across to Ittira Davis, MD and CEO at Ujjivan Financial Services. Ittira, thanks so much for joining in. Just wanted to understand, the reports firstly suggesting recently that RBI has turned down relaxation on SFB norms. What are the plans to meet RBI norms in terms of promoter holding, dilution to 40% by Jan 2022? And of course, first wanted to understand that before the earnings.
Hi, good morning. It's good to be here. The RBI news which was given a couple of days ago, I'm not sure about the source because we have not heard anything new from the RBI. We are in discussions with RBI on seeing how best is to take the dilution or the listing of the bank forward. But the discussions are on. We have a meeting in early June or before the middle of June. And that will give us some direction on what is going to be the final outcome. Listing is something that is going to happen, but we also need to see how the interests of the existing shareholders are going to be protected and how the final game plays out in terms of dilution, etc. So it's not just a single event. It is actually a combination of events, and to that extent, I think we need to wait for a while to see what the RBI is going to come back to us with.
Sure, you've set some internal timeline or deadline by which you plan to at least take a call on whether or not to list.
Yeah, that internal deadline is by the end of June as to where the direction we are going. We have already started gearing up for both options which we are likely to see, either one or the other. So I think by end of June we'll have the right direction, and that gives us about 7 months to set right everything in place.
Okay. Specifics now. How has the business environment been for Ujjivan? The environment has been tough. Your base is low, numbers are looking different. But what is the reality according to you?
Yeah, the fourth quarter that we just concluded and the numbers which were out yesterday confirm that it's been one of the best quarters for us by way of new business. That is a confirmation that the 2018-19 financials which we have produced is back to business after we took care of the demonetization effect in the previous year. The last financial year 18-19 has shown that spectacular growth. Our balance sheet our footings on business has grown by about 45-46%. We are back to profitability on the bottom line. On a GAAP basis, we have reached 199 crores. And it shows that we are back to doing what we are supposed to do, the business that we had, financial inclusion, as well as growing the other parts of the mass market business that we are focusing on.
Sure. Which segments do you see leading growth? What will be the share of the non-MFI book? And also, what's your outlook on margins going forward as well? Because we've seen a fairly healthy set so far, but do you perhaps feel that a higher cost of funds could pull them down going ahead?
See, right now in the year that is concluded, our MFI was 85 and all other businesses was about 15%. In the next financial year, that 85 will reduce to around 80 or slightly below that, and the other businesses will increase to about 20%. So that's the way we are looking at for next year. Having said that, the overall base is going to grow. So, the MFI business will also grow, as well as our housing and MSE business. On the housing and MSE and other businesses, we are focusing more on the secured business. And that, of course, has a consequence that yield will come down a little bit as we move from unsecured to secured. But I think that is a decision that we have taken, and it will balance the secured and unsecured portfolio. And I think that's a step in the right direction. Interest costs, yeah, I mean, the market is a bit tight. We'll have to manage that. But I think the expectation for next year is slightly improved return on assets of about 1.8%.
But is capital freely available when you are looking at borrowing money from mutual funds or from banks? Are they ready to give you capital on tap? Or, earlier if you made one call, you got capital, now you could make 5 calls to get the same capital?
The capital is not an issue because we have about, our capital adequacy is about 18%, 18.4% at the end of the last financial year. And going into this financial year, we have, tier 2 capital, which we are negotiating with the IFC. It's about $50 million equivalent in rupees, which will be available. And obviously, if we have to do some form of listing, then that gives us an access to further capital. Now, in terms of working capital or funding which is required by the market to grow the portfolio, that has not been a problem because we are now a scheduled bank and have all the support and guidance from Reserve Bank, like any other bank for that matter. The name might say small finance bank, but we are governed by the RBI and we are available and access the same financial markets like any other financial institution or any other bank for that matter. So we have not had any problems in being able to grow our book by funding ourselves from the market. And most important, we are trying to grow our CASA and customer deposits because that's the best way to grow our book. And the full impetus this year is to grow our balance sheet and build our deposit base.
So in fact, talking about that, where do you see the CASA ratio in the next 3 years if we were to give it that timeline at a time when everyone else is finding it a little difficult given the current scenario? What's the outlook on your end?
You see, the small finance banks, unlike previous starting of banks, started with an asset base. Previously when banks started, they had 0 assets and 0 deposits. Small finance banks had a certain amount of finance assets which were there on their books, and that needed to be funded by a deposit base. So we have to build that deposit base. Ujjivan has reached about 10% in terms of CASA, and the idea is to take that 10% to 20% in the next 3 years. It's a tough call, but we have the infrastructure, we have the products, and we have what it takes to deliver that. So I think in 3 years we'll be able to double our CASA from 10 to 20%.
Closing comments. The migration of being an NBFC into bank has come at a cost. When do you think the rollout cost will even out?
We have, we were hoping to complete the rollout in 2 years, but the first year we got stalled with our handling demonetization. Now that's behind us. Last year we opened 287 branches, and this year we'll complete in the first half, hopefully we'll complete the remaining 50 branches. Thereafter, the branches that we add will be added based on business potential, so we are hoping to add another 50 branches. So effectively, by middle of this year, all the transition part will be completed. In fact, we're looking at this year as a normal operation. 50 branches is something that we have to take in our stride. So we are really looking at pushing, in all directions, new products. We have new team on board. We have a new managing director who will be joining shortly. And, with a digital background, we have a new person on our board. Sachin Bansal will be joining from 1st of June on the board of Ujjivan Bank. He will bring some technology and all the other things which we need to take Ujjivan to the next phase. And I think we are all the whole 15,000 staff here are very excited, and I think we are on a good wicket.
Okay. And great. So, all the signals seem to be sounding good. Just, one last question then, in terms of ROA, you've guided it for about 1.8% and ROE is at 14% for FY20. Are you sticking to that, and any key drivers you want to leave us with?
Yeah, we are sticking with those numbers because they have just been released, so I think we need to stay by them and work towards that. But the main thing for this year is going to be growing our deposit base, and I think that is very critical because any bank needs to have a good deposit base, and I think that is going to be our focus. While we'll be adding a few new products, we have now launched our personal loan program. We'll be also launching our vehicle loan program in the second half of the year. And we'll be adding a few other products towards the later part of the year. So I think we have a steady business growth formula with us, and most important, to reduce our costs, which is one of the other things that we are focusing on, is where we are trying to use digital and technology. And I think you can see all the steps we are taking is focusing on that and moving in that direction.
Thank you so much for joining us, Mr. Davis, and congrats on a good set of numbers there.